Hey, good morning. Welcome to the morning brief. Today is Monday, June 23rd. So, what's going on today? Well, we've got some news, not a ton, but we've got 945, we've got flash manufacturing PMI. That's a red item, so we need to be aware. Also, flash services PMI, all both at 945. 10 a.m., we've got existing home sales, FOMC member Bowman speaking. And for the most part, that's it. We do have some more talking heads speaking the rest of the day. We have FOMC member Goolsby speaking at 1:10. At 2:30, we have two FOMC members, Krugler and Williams, both speaking. And that is it for the day. So we do have some talking heads, and we have a couple of red items. So let's be aware. Make sure that your positions are or stops are appropriately set for those news releases because the market could spike one direction or the other. Um, Looking at the charts, going back to the daily chart. So interesting, we are now below or we're right at the moving average, the 20-day moving average, and we're above the 50, we're above the 100, above the 200. So still in a bullish pattern and a definite bull flag. However, what's interesting is Friday was a very slightly an up day, but over the weekend we were down, not a ton, with the Iran-Israel, bombings going on, the U.S. getting involved. I really expected this to be much, much more negative. But the market just continues to be I don't know if I want to say resilient because I'm not sure that it's being resilient. I think it's being numb. It is numb to outside stimulus. We have been going sideways for weeks now. The market shrugging off bad news, shrugging off good news, and going sideways. So kind of a weird economic situation, macroeconomic. This whole thing with Iran, Israel, now U.S. bombing, getting involved in the bombing over the weekend. Not good. You would think that risk would be going, the market risk would be much, much higher than it seems to be, showing. So anyway, we can't really tell what's going on. Why is the market ignoring all of this stuff? I don't know. All I can tell is you've got to trade what you see in the moment. That's the only way you're going to survive as a trader. If you take a macro view, we should be down substantially. I mean, we should be down probably around 4,500 if you take all the macro environment negatives in place. That being said, if you only look at the positives, we should probably be higher. It is what it is. Moving forward, looking at inventory. Inventory was positive on Friday, positive price action. Market seems to be functioning as it should be. Difficult to ascertain what is actually going on. Overnight action, 80 points. That's more than normal, way more than average. So volatility is certainly here to stay. Where do we have support and resistance for today? Let's look at resistance on the top side. That 60-50 area is definitely of interest. There's a high from Friday, 60-71, 60-90, 60-100 to me is kind of the number. If we can get above 6,100, we're probably going to continue to move to the upside. Support, on the other hand, 6,000 is a number we're all watching, but it has been sort of chopped around, so it's not as strong as it was. 59.80-ish is definitely an area. 59.50, also a very strong area. Below that, just above 59.20, 59.23. Of course, 5,900, again, that is, to me, is the line in the sand. Get below 5,900, it's look out below. We get above 6,100, and we could easily chop to the upside further. So that's both sides of the market there. Stock Trader's Almanac for today is 52.4% chance the market will be up based on the Stock Trading Almanac. Hope you have a great day. See you tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.